Hey everybody, Chris Pulver here. It is around 2:30 p.m. Eastern Time on Wednesday. Wednesday. It's all about NVIDIA after market today. We had a pretty interesting volatile day. Open up, we had the S&P up around 50 to 60 points, dropped all the way back down. So here's your close yesterday. Opened up with a gap higher, up around 0.91%, 55 points, and then dropping hard by about 1.26 and then just kind of maybe settling in right back around the open. So a lot of volatility, not a lot of direction. We're sitting here looking at literally S&P pretty much flat, 0.02%, SPY 0.03%, NASDAQ QQQ 0.04, similar price action today. So here's where we started. Here's where we're at. Let's see what the day finishes at. I have one trade running that might actually work out to be pretty beneficial. This is going to be something I've got to take into the close. 59.50 would be a perfect little $5 winner on a broken wing butterfly pin trade. If we're above that, I'll keep my 50 cents. If we are below that, I have some flexibility to the 59, I guess it'd be 59.45. But hopefully we're not going to go too much lower than I'd say 59.50. I'd like to take a few bucks out of that. Last couple of days have been pretty noisy as far as direction. Usually we're starting to see the markets start out pretty light, start out pretty calm and slow. We've obviously had a higher implied volatility the last couple of days with the sell-off since Friday last week. But we're looking at a lot of indecision during the day. So we had direction, indecision, right? So it pushes down, pushes up. Friday was all pretty much one direction after a little pause briefly in the morning. Pushes down, pushes up, pushes down, pushes up, pushes up, pushes down. Very different intraday price action. So just trying to trade small, pick my battles, take little swings at things. Meanwhile, I've got some good trades running. I'm still hedged, and I'm going to continue to hold these hedges because this is the easy part. If prices go back up, everything in the portfolio benefits from that with a positive drift. I'd say I'm slightly tilted bullish in the portfolio, but I'm hedging for a reason. And if we push down to the 144, the 200 moving average, this is micro E-mini futures. That would be a nice little reward to risk. And same thing here on futures. I've got some ES contracts as well as MES. I'm still trading some income trades on XSP, SPX that are quite a bit out of the way. Trade on QQQ, same type of thing. So a lot of income trades in some of my services. But anyway, NVIDIA, let's talk about that for a second. I'd share this in some live sessions this week just to put some statistics to NVIDIA and how important it is. So NVIDIA is trading at 130. Previous highs around 154. Previous lows around 113. Expectations for today's earnings is going to be aftermarket 38 billion, 38.1, EPS at 0.84. And you'll see here that it is a higher revenue print or higher revenue expectation as well as higher earnings per share expectation. So, earnings trends continue to look positive for NVIDIA. I think the biggest thing for this print and this maybe earnings transcript would be positive guidance. There obviously was a huge scare of DeepSeek, which is what disrupted NVIDIA right here during that little drop in February. That was actually the end of January. So the end of January was DeepSeek. Then 2 weeks in a row we had tariffs. So we had just like 2 or 3 weeks of really dramatic, silly price action that the market showed some resilience to. But at the same time, NVIDIA is not up to all-time highs. In fact, I like that this technical level played out nicely. I sold some premium down here and did end up taking some profits once we filled the gap. Now we're sitting right back in the middle, and I'm sure the whole market's wondering, is NVIDIA going to be enough to push it higher? Is it going to fail and the market gets a little bit less excited? But here's how important it is. NVIDIA is 19% of SMH weighting, which is a semiconductor ETF. It is 7% of the SPY, and it is 8% of the QQQ because of the market cap weighting. That's how much influence this earnings and this movement, this catalyst will have on the overall market. I would not be surprised coming into Thursday trading or Friday trading that the market possibly has like a 1 to 2% movement one way or the other, all hinging on whether NVIDIA is taken optimistically or pessimistically by the market. I actually did end up taking some profit on SMH. So I had this trade out to, it was basically a 1-1-1 strategy, which was $1.13. It was really just designed to be an income trade, but because there's so much on NVIDIA and whether it goes up or down, I really don't want to own the shares. And so I closed this out for over a 50% winner. I'm just taking it. I said I'm willing to own. That trade is done and over with, so it's closed out for a winner. But I will say that if it becomes a high, low, lower high, lower low, I could get possibly more attracted to SMH again. But if we have a really disappointing move in this market overall, and SMH is down, and NVIDIA is down, and the markets are down, I am going to make a pretty swift rotation, and I'm already doing it because I feel like I'm pretty well diversified in my portfolio. But I'm going to make a pretty swift rotation out of momentum and out of growth, and really out of a lot of tech outside of maybe Mag 7. And I know that might not be a favorable opinion, just because Mag 7, nobody wants it anymore because it's super high concentrated and everyone's had it in the portfolio. Look, I think if you're talking about quality over quantity, yes, Mag 7 needs to come down. The market needs to broaden out. It might do so with a bit of a bear slide. But I do think if you're putting money into quality stocks, I mean, I wouldn't be surprised in the next 5 to 10 years if Amazon is going to be trading back up to all-time highs, or even possibly getting a split again at $500+ or $1,000+. You got to give it time, right? So could this slide? Sure, we could slide down to this 200 moving average and pick up some buying opportunities. We could also see this slide down to a 5-period yearly average, which are a couple of my big levels on indexes. So to put this in perspective, and I shared this in a video last week with TradingView and respective communities. But look, I'm fully expecting, and it may not be fun, and it's going to feel terrible. But if the market continues to slide down towards this 200 moving average, I'm looking at the SPX around 5,700, possibly a bit of an overshoot around 5,500. But in that fear is where I'm going to look to take some nibbles and see if I can get the market to bounce from there. I think technically that'd be a nice solid flush. It may not be back up to all-time highs as much as that would be awesome, but it might be a flush down, a pullback to, get some short-term gains, and then make sure that we're not going to fail and make a lower low. That would be way more disruptive technically, in my opinion, as opposed to market flushes, finds a way to base, and then we grind back for the rest of the year. If that is possible, if you're trying to tell me that this year the markets are going to be lower from January to December, so by January to December, if the market is negative, well, we're going to be sitting right in here below, 6,000. Is it possible? Sure. But every year, this market, more often than not, finds a way to be higher, even if it's to the tune of 7%, 8%, 5%, 3%, 10%, whatever. I think if we can find a decent flush and get a bottom in, I'm going to try to be a little bit more aggressive on timing that, trading a lot of options around it, because even if we don't quite get back to the highs, to be 3-4% positive on the year, we could get back to where we started, and at least I could time out some trades here where I could generate some income and do pretty well on a timed move. So I think that this is still, in my analysis, knowing that the market may continue to slide, I'm not getting overly bullish right now. In fact, that's why I put all these hedges on. So ES hedges here, MES, like I said. Also, some of my hedges are index related, but I'm holding shares of FXY for the Japanese yen. Also, I was trading. I just closed this out for a profit. This was 6J, which is Japanese yen futures. The only reason I'm not holding this trade longer is because my expiration was limited to September. I took this trade in 2025, so started out this year, and we've obviously seen a decent amount of traction to kick off this year. So it worked out pretty nicely. I just did a pretty simple debit spread. Risked about 687 to make 1,200. I was already up $450, and rather than waiting another 4, 5, 6 months to have full profit, I'm just going to take the profit and move on. Now, I will be watching this to see, is this a potential head and shoulders pattern? Is this a reversal pattern? If so, I may look at building a position again, or maybe just look to revisit off the lows and see what the option contracts looks like for Japanese yen futures. So that is where I am at. Also have a nice little play in copper. Copper's dropping a little bit. Let's take a look at China. Here's HSI. HSI is up to some fresh highs. CQQQ hanging in there. Alibaba. I let go some of the shares. I do have a bunch of income trades with options, but my $99 position, $85.50 position, I let that go at 126. So I didn't enjoy this last little pop to the upside, but that was okay because we already ripped like 65%. I was just taking the profit. I still have some shares of Baidu, and that's hanging in there. I also have shares of JD, which had a nice little gap higher today. So I have a break even here, 35.92. We have earnings the first week of March. Hopefully it's going to be positive earnings to try to get back to these September highs. and this gets called away for me for about $4.08, I might continue to roll this. If I'm, well in the money with my covered call, I might just roll it week by week. Even I grab, 20 cents a week, 25 cents a week. I've got about 1,500 shares in JD, so that will add up nicely just for a little income trade, even if I'm not catching, all of the move. SEHD, probably one of my better dollar cost averaging trades this year. It's got a solid dividend at 3.5%. I'm expecting this to be a much lower volatility, so we got a beta of 0.58, so it's not nearly as volatile as what you'd see in the S&P. This would be kind of the equivalent of like a larger basket of the Dow. The Dow's 30 stocks. SEHD, I believe, has like 70 to 100 stocks, maybe more than that. I know the SEHG one is a growth ETF that has, well, I don't know, 230 stocks or something like that. So it's a diversified kind of low beta play, but I'm going to dollar cost average into that one. Also, if you want to remove some of the volatility from the portfolio this year, I think a lot of that's going to be trading equal weighted. So because of this large concentration in Mag 7, equal weighted to me is a pretty attractive play. Reduce the volatility, dollar cost average, trade some options around it. RSP is a good one for the 2025 decisions, and a QQQE, same thing. This one is coming down faster because tech is more vulnerable, but RSP I like quite a bit, and I'll keep an eye on this one. Also, one thing to show the strength of our market, if we're going to go into a market breadth scenario, every time we make a new high on the SPY, we should see, hopefully, RSP making highs within about 90 days. And so that's why I actually have this measured move from when this thing started. So 90 days equal weight all-time highs. That would be right in here. We'd like to see new all-time highs. If we go back to the SPY, so have we made a new high since December of 09? Let's go December of 09. This would have been early November. This is interesting that we actually hit a high in equal weight before we hit one in SPY, but 90 days out from here, we're not quite there. So as far as market breadth, if we're going to have 493 stocks show up and perform and kind of carry the weight instead of the Mag 7, then this might be nice to see a little bit of a breakout to the upside. I think that would give the market some renewed optimism, and it's not just all about Mag 7 carrying the torch. We actually might see that there's optimism going forward, earnings growth, revenue, profit margins, things like that looking good. The big concern, moving forward, and there's a lot of uncertainty in 2025. That's what I planned on. That's what I've been trading mainly, is just trying to not be super directional and just carving out some income trades, and that's worked out pretty nicely. And then obviously bracing for some downside in case things slide a little bit. But if we're going to see some renewed optimism, I do think that the consumer needs to also sound and look a little bit better. We've got consumer confidence way down. We have spending. It's like, unless you're in the top 10% of spenders or household earners, you are not spending a lot of money. So inflation at 4 years running and 4 years running hot is starting to weigh heavily on consumers. We have the housing market in the U.S. at all-time unaffordable housing market, simply because house prices are still elevated and interest rates are not really coming down a ton. So it's just a lot of pressure, a lot of pain points out there that may be felt. But on a positive note, here is the 10-year yield that is dropping. Since we had this high at 4.8, we're down almost 60 basis points, which hopefully that will translate into some improvements in the mortgage rate. So right now, 30-year mortgage is at 6.85. It'd be lovely to see even 30, 40, 50 basis points lower. See if we get into the 6.5 range, or low sixes would be even better. So anyway, that'll do it for this little video update. Big thing is just NVIDIA. I think the market's just going to have a huge reaction after the fact. It's not something I necessarily want to trade. I try to price out NVIDIA for an actual earnings play. The market itself is only looking at about a 10% move. So, we go up, let's say $13, we go down $13. That's not really a big directional play, in my opinion. It's what it means as far as market cap weighting. How does it affect SMH? How does it affect the SPY and the Qs? And obviously, if there's a blowout move, it's going to be interesting to see, like, maybe NVIDIA moves $15 to $20. And if it does, is that positive or negative? I just don't know if the market's going to kind of be on the fence of, do we jump back into this AI hype, optimism, renewed sense of confidence, or do we just dump everything, dump momentum, dump growth, dump tech? Let's put a pause button on the AI trade and see what else is out there. And we might see just an aggressive rotation into everything that is not momentum and not growth, and mostly things that are just going to be seeking some safety and less volatility, which obviously that's trading. There's sector rotation. I like the big plays of equal weight this year instead of going SPY QQQ because of that Mag 7 concentration. So I'm mostly looking to see what is the reaction after NVIDIA and see where the markets lead us on Thursday, Friday. And it's a big one. So unfortunately, it is really important. More important as far as the anticipated move than it was with US CPI. More important than it is with a major FOMC rate decision if they are cutting or raising rates, which right now the Fed is in full pause mode. Probably even more important than the randomness of Donald Trump when he's talking about tariffs, like you mentioned today with European Union, 25% tariffs. We don't need Canada's lumber. We're going to have a good relationship with China, but we're clearly competitors with them. So the highlights and the headlines continue to drop. So, all right, I'll let you go. Thanks for watching and have a good rest of the day. See you soon. Bye.